Hey guys, what's up? Alec back with the daily stock market, and an extremely interesting week just unfolded before our eyes. And the talk of the town is Meta Platforms at $472 per share, up 20% just on Friday. And its moves was one of the largest market cap moves in stock market history. If we scroll down, we can see that market cap went up around $200 billion just in one day of movement. Again, one of the largest moves in the stock market history. So it's very interesting to see what's going on with Meta Platforms right now. And obviously, if you held any time in the last year, you're up significant amounts. If you go back in some of my older videos, we were buying Meta Platforms under $100 per share, under 150, under $200 per share, time and time again. So everyone that's part of the daily stock market community benefited extremely well from Meta Platform stock. So congratulations to all of those holders. In this video, we're going to talk about the week ahead. We have another exciting week ahead of us. Caterpillar, McDonald's will be reporting Monday before the open right away. And then after the close, we have Palantir reporting, which is going to be a very scrutinized and interesting report. Now, before we go much further, just slap a thumbs up on this video. Subscribe on YouTube with post notifications on if you're not yet, so you don't miss out on any full length videos, and share this video with a friend. And without further ado, let's jump into Tuesday. Before the open, we have Spotify, very interesting. We have BP, which is another interesting one because we already had oil report last week. So you could look last week to get some indicators on how BP is going to be performing this week. We also have Toyota. After the close on Tuesday, it starts to heat up because we have Snapchat INC. And Snapchat is known for making big moves on earnings. We can see Snapchat flying up or down lots of percent. So if you're a lotto options player, Snapchat might be the stock for you this week. We also have Enphase. We have Ford Motors reporting, and we have Chipotle. Okay, now moving over to Wednesday before the open, we have Alibaba, Uber, CVS, Roblox. Then Wednesday after the close, we have PayPal and Disney. So lots of stuff going on this week just in the first half. Not to mention, we also have Mattel and Wynn Hotels. Okay, moving over to Thursday, the second half of the week is not nearly as exciting because on Thursday before the open, we really only have Spirit Airlines, Hershey, Tapestry, Under Armour. Nothing too exciting there. Spirit's probably going to be the big one of the open before the open. Thursday after open, we have Affirm, which is interesting. We have Pinterest and Cloudflare, both interesting stocks to watch. And Expedia, a good travel stock to see how travel has been the industry of travel. So Friday, we have Pepsi, Canopy Growth, and that's about it. Pepsi is going to be interesting. Canopy Growth is going to be interesting to see how cannabis stocks are performing. They obviously haven't been good at all over the past few years. So we expect more doom and gloom from Canopy Growth Company, but we can see, we'll see what's going on. Now, before we go over individual earnings of this week, I want to go over this article real quick. It's Barron's Weekend Stock Picks, GE, Meta, and Turmoil Tesla. I want to go over this just because it's very rapid fire and we go over a lot of stocks pretty quickly. So let's start. GE CEO reflected on the breakup of General Electric in the company's last annual letter expressing optimism for future of GE Aerospace and GE Vernova while citing past challenges like debt reduction. Okay, we also can see that Meta Platforms' first ever quarterly dividend of 50 cents announced with 20% stock surge signals a big shift in big tech's dividend approaches. Okay, we could start seeing more big tech companies offering dividends to compete with something like Meta, prompting investors' optimism for future gains akin to Microsoft and Apple. And that's only good for the consumer, which is me and you. Okay, we also can see that the U.S. sustainable funds experienced a record $13 billion outflow in 2023, led by poor performance and ESG backlash noticeably from iShares ESG, which is ticker symbol ESGU, while total assets still reached 323 billion by year end. Okay. Now we can also see that Apple's weak forecast briefly affected the stock, but analysts, including Morgan Stanley, anticipate positive developments at the June Worldwide Developers Conference, despite ongoing concerns about fundamentals and valuation. Okay, we can also see that Tesla stock fell around 2% due to disappointing forecasts. We saw investigations and also a concern about slowing EV sales, reflecting challenges in 2024 with slow China sales, production disruptions, price cuts, and a 24% year-to-date stock decline. So yes, right now Tesla is down to $187 per share, down 21% in the last month, down 25% year to date. And it's really not doing too hot right now, which is the time you typically want to be dollar cost averaging on a little bit heavier and even buying whole shares at a time. I personally want to be buying the heaviest under $150 per share, but $187 per share is a comfortable price for me to start adding to my long-term portfolio and long-term vision. Again, this is a stock that I can see above $250 per share in the next 6 months, 6 to 12 months. So even a long-term swing trade could be beneficial on a stock like Tesla sitting as low as $187 per share right now. However, I am holding on to buying power specifically for Tesla to buy heavier under $150 per share. Now, if we check CVX, which is Chevron, one of the biggest oil companies in the world that just reported earnings and beat earnings, we can see that their most recent quarterly earnings did beat. If we check XOM, ExxonMobil, which is another one of the biggest oil companies in the world, we can see their stock price is only down 1%. But if we scroll down to their earnings that just reported, they also beat earnings. So therefore, it could be a good play to consider that BP is going to beat on their earnings coming up this week. However, there's no guarantees, and we do a deeper dive on my Discord. So if you want to get into the VIP polls and see exactly what everyone's taking, calls, puts, what I'm personally taking, then go ahead and message me on the daily stock market on Instagram. Now 224,000 followers, 875 posts. Click on success number 9. Read through some of those positive testimonials yourself. We've helped over thousands of students now, all experiencing the same results. So make 2024 your year of stock market success and join a stock market family that has had proven success time and time again. Now back to the video, we have PayPal reporting this week, which is going to be an interesting stock. We can see them up 12% in the past 3 months. However, in the past year, they're down 27%. And in the last 5 years, they're down 30%. And they were as high as $300 per share at one point. So even from current price today to all-time high, they're still down around 80%, currently sitting at $62 per share. Now here we have an interesting analyst article seeking clues to PayPal's Q4 earning, a peek into Wall Street's projection for key metric. In an upcoming report, it's predicted that Wall Street analysts to post a quarterly earnings of $1.36 per share, reflecting an increase of around 10% compared to the same period last year, which is a bullish thing. Revenues are forecasted to be $7.8 billion, representing an increase of around 7%, year over year. Over the past 30 days, the consensus EPS estimate for the quarter has been adjusted downward by around 0.5%. This demonstrates the covering analysis collective reassessment of their initial projections during this period. While investors typically rely on consensus earnings and revenue estimates to gauge how the business may have fared during the quarter, examining analyst projections for some of the company's key metrics often help gain a deeper insight. Given this perspective, it is time to examine the average forecasts of specific PayPal metrics that are routinely monitored and predicted by Wall Street analysts. Analyst assessments point toward revenues from other value-added services reaching 778.34 million. The estimate indicates a year-over-year change of plus 14.3%. Another bullish thing. The combined assessment of analysts suggesting that transaction revenues will likely reach 7.11 billion. The estimate suggests a change of around plus 6.1% year over year. Another bullish thing. Based on a collective assessments of analysts, U.S. net revenues should arrive around 4.45 billion. The estimate suggests a change of plus 3.7% year over year. So PayPal is a very risky stock, keep in mind, because if you look at their EPS, the last 3 quarters, they've been not only growing their EPS quarter over quarter over quarter, which is one of the most important things to do in the stock market. They've also been beating expectations every single quarter, okay? But if we scroll up to PayPal stock price in the last 3 quarters, the share price of the stock hasn't been reflecting the growth of the EPS, the net income, or the revenue, unfortunately. Okay, we can see that the stock price has just been headed down while the fundamentals of the stock have been headed up, up, up. So in my opinion, they could definitely have another good quarter on earnings, but that could not be reflected by the stock price overall. However, we are starting to see some positive momentum in the last 3 months from PayPal stock, which is a good sign, and it could be turning a new leaf on the share price and how the stock market views PayPal at least. And this could be a huge diamond in the rough if they keep continuing to increase and grow their net income, their EPS, and their revenues. Overall, it is a super risky stock to be playing for earnings because of that reason. And the last stock we'll talk about today is a crowd favorite. And if you don't know why it's a crowd/stock market favorite, well, let me show you. Last month, it's up 16%. And the last 3 months, it's up 45%. The stock is on a huge rally, and that's Uber stock, ticker symbol UBER. You all know them. You might not all love them, but let's talk about it anyway. In the last year, they're also up 111%, going on a huge rally, around a 30% rally from April to October 2023. And then from end of 2023, late October into current day, we've seen around a 65%, another additional rally on top of that 2023 rally. So the last 12 months has been very well and good for Uber stock, up 111%. But let's talk about if they can keep going, because we've seen them at close to $60 per share in the past, but then they ended up falling 63%. So are they a long-term stock that you want to be holding? Are they just an options call or put on the earnings play? Remember, they just IPO'd in 2019, so they could be getting over that rough IPO phase and into some real growth here. Uber stock is one you want to do a lot of your own research in. To remember, they are a $140 billion market cap with a PE ratio of 137, implying they're grossly overvalued in my opinion. And I would automatically set price alerts around $39 per share to alert me to buy if I'm looking to hold for long term. I don't have to own Uber stock above $39 per share, $38 per share, even $35 per share. I'm in no rush to personally own them, so I just set my price alerts, and if it hits, it hits. I'll be more than happy to buy a large position at $35 per share, but above that, I'm not that interested. Okay, so as we continue to scroll down, we can see that this is a trendy stock right now. Remember, the last 3 months, they're up 45%. The average volume is 20 million. Okay, and remember that market cap, 140 billion. Now, if we type in Lyft, what happens if we scroll down, we can see that market cap is 5 billion. So you can see the huge difference, significant difference in market cap. We can also see that the PE ratio is significantly different. Lyft is not even a positive earning company at this point. We'll look at the EPS on Uber in 1 second, but if we go, we can see the last 3 months. They are being benefited by sympathy trading with Uber, most likely up 41%, and now they're cooling off. So I bet they can continue to fall down to $10 per share once again. They really IPO'd the same time as Uber, and they IPO'd at a higher amount, $72 per share. They're at $12 per share with the $5 billion market cap. So make sure you subscribe with post notifications on YouTube, because in a future video, we're going to do a Lyft versus Uber Ultra comparison and see if Lyft stock is even worth buying anymore. But let's go back over to Uber, because that's what this segment of the video is about. And if we scroll down, we can see that they were in the same scenario as Lyft was in 12 months ago, and that was unprofitability. Okay, they did have a surprise earnings Q4 2022 into profitability. So if Lyft can do something like that, we can see mayhem ensuing on the stock price, just like Uber. So it's very interesting to see a $140 billion market cap compared to a $5 billion market cap on Uber. But here is a good analyst article, so let's go over it. Uber gearing up to report Q4 earnings. What's in the cards? Uber is scheduled to report fourth quarter 2023 results on February 7th before the market opens. Uber has an impressive earnings surprise history. Its earnings surpassed the estimate in 3 of the preceding 4 quarters and missed in the remaining 1. The average beat has been 533%, which is insane. Given this backdrop, let's see how things have shaped up for Uber this earnings season. Q4 expectations. The consensus estimate for revenue is pegged at $9.75 billion, indicating a 13.2% growth from year-ago levels, a bullish thing. The top line is likely to have benefited from strength in its delivery business and improvements in the mobility business. Okay, because remember, it's not just people Ubering around in cars. They're also doing like Uber Eats and delivery and things like that. Now, this chart is interesting because it shows the EPS surprise here with a green or a red arrow. The most recent one was red, but the last 3 in a row were green, green, green. So that is a bullish thing because the trend has been a good surprise in the recent quarters. So if we continue to scroll down and read more about this analyst article, we can see that our estimates for delivery revenue is pegged at $3.1 billion, indicating a 3.5% growth from 1 year ago reported figure. The uptick is likely to have resulted from an increase in online order volumes. Our estimate for mobility revenues is pegged at $5.2 billion, indicating a 26% growth from a year ago quarter. With $5.2 billion, we can see majority of their revenues coming from the mobility business, and for that to grow 26%, that's a very bullish thing. Okay, we can also see that the freight revenue is pegged at $1.4 billion, indicating a 9.3% decline from a year ago reported figure. Lower revenue per load and volume and the challenging freight market cycle might have weighed on this segment. On the flip side, high sales and marketing expenses and costs associated with paying incentives to drivers due to changes in business model in some countries are likely to have affected Uber's bottom line in the quarter under review. And this analyst article estimate for earnings has remained flat in the last 90 days. What this analyst article model says, our proven model predicts an earnings beat for Uber this time around. If we look at some more headlines for Uber earnings, we can see that the growth has tripled and is still a no-brainer buy. Big pensions load up on Uber. Uber drivers see a dip in monthly earnings. U.S. earnings at weeks ahead. Unlocking the Q4 potential for Uber, exploring Wall Street's estimate for key metric. Uber stock has skyrocketed in the last years, a time to buy. And the list goes on and on. So if any of those have caught your eye, just go to Google, type in the exact headline and where the article is from, and it'll pop up right away and you can read it on your own time. And as always, I'm here just to steer you in the right direction. And if you appreciate that, just slap a thumbs up on this video and subscribe on YouTube so you're alerted when any of the new full length videos come out. Other than that, if you want to join my stock market family, click on success number 9, click on success number 8, success number 7, success number 6. They go back a long time. We've been doing this for years and years and years and help thousands of students just like you become more advanced trader in the stock market. You can even follow along with my exact signals with proven success and experience the results and your account growing for yourself, and then upgrade in the future to a more aggressive plan to work one-on-one with me. So if you do want to join, just message me on Instagram and say, I want to make 2024 my year of stock market success, and I'll get back to you right away with an application so that way I can learn the most about you and help you out the best way possible. Shoot you over my website, and if you like what you see and the price is inside your budget, then let's go ahead and get started in the stock market together and make some money together. Thank you guys for all the love and support you've been showing on every single YouTube video and Instagram video. Share this video with a friend, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.